So everyone, give a warm welcome to Tony.
Hi.
Hey, Tony.
Yes, hi.
Hey, how you been?
Great, exciting. I'm looking forward for this. Yeah.
Yeah,
Yeah. How
yeah,
you? Busy
good,
day?
good, good. Oh yeah, it's always chill with the stream. Yeah, I
Yeah,
always
I
let them
see a
know,
lot of
stays
people,
in.
right, attending the event and yeah, a lot of retweets is going on. This is exciting.
Thank you, and glad to have you on as well. Also, for the audience, if you guys haven't heard about Tony yet, Tony, would you be able to kind of give a quick rundown of your like introduction?
Sure. Hi, everybody. My name is Tony Chen. I'm the co-founder for Pledge. Pledge is a marketplace for financial NFTs. Yeah.
Yeah, and I kind of wanted to dive into it a little bit too, because you're starting to utilize 721s and also 1155's as well. So it's like you're now starting to create this similar to that DeFi to that NFT play to kind of bring in more digital assets to the industry as well.
Yes. So remember all the ERC standard. Initially, we have ERC 20. These are all fungible token, meaning that they're all replaceable. And then we have the ERC 721, which make all the NFTs, and we make all these tokens unique and non-replaceable, non-fungible. And then now we are using the latest ERC 1155 standard to make semi fungible token. What that means is the idea is for us to use the ERC 1155 standard is that we have different, basically, we do Bitcoin loans, and all the loans we make, we convert them into financial NFTs. And these financial NFT are done with the ERC 1155 standard, where between different pool, they are not fungible because they have different interest rate, but within the same pool, they are fungible. Meaning that, like, a simple example will be something like, for example, if you go to the bank, you you buy some CD, and all these loans, they have different interest rate, and because they have different interest rate, they are not interchangeable. But at the same time, if the interest rate are the same within the same category, they will be replaceable. Yeah.
Yeah, and it's starting to kind of create that paradigm shift of, a lot of people are thinking like, NFTs are just utilized for art, fashion, gaming, but there's a whole new world of, even just having that DeFi component into it to getting loans and actually getting interest rates as well. So I kind of wanted to go a little bit more into your platform. So it shows
Right.
that, for all these merchants that are looking to, be able to borrow different types of assets. Is
Mhm.
it mainly Bitcoin for now, or do you have plans to kind
Yes.
of?
A great question, Michael. Thank you. So for now, we support Bitcoin, and we are on the BNB chain, so we support BNB also, certainly. But long term, we see all these will be digital asset. It can be cyberpunk, can be bored apes, it can be the latest ape token, right? All these will work, and all these we see those will be can be collateralized. And there definitely will be people that will be willing to use those as collateral to borrow money against it, just like we use real estate. And at the same time, a lender will be very interested in lending our money using these as collateral. People who borrow the board ape get all these ape token recently, right, and make a lot of money out of it just by borrowing the apes and get the airdrop for the ape token. I'm sure everybody know about it. So borrowing and lending on these asset will certainly be the right direction.
Yeah, and even for like the artifact clone X's as well, it's like
Mhm.
the just getting a clone back then was able to mint you, multiple items that are going to be released under that also could be used as collateralized NFTs. Now for like the market as well, especially for people that are in the business of needing collateral for business operations or things like that, like cash flow is a pretty big thing within companies just to make sure that cash flow is going to be there for events or even in times of if they just want to go into like funding an invoice or things like that. So what made you guys think of switching and getting into kind of like the 721s for interoperability?
Yeah, so what we see is because I want to share a little bit background about myself. I have been a real estate broker for the past 12 years. So I've done a lot of loans in the traditional finance world where people are using real estate as collateral. So if any of the audience bought a house before, you will understand when you go to the bank will loan you the money and you sign all the loan document. Once you sign all the loan document, the bank will take the loan document and they will sell it to the investors. And basically, we tokenize all these loan documents and convert them to the financial NFT, where we will be creating a marketplace for people to trade it. And it is a huge market. We are just using the latest ERC 1155 standard to represent the note version and make them. We call them the financial NFT, where people can constantly trade this in our marketplace.
Yeah, and also for the 1155s, like they allow it to where you can hold and be able to, produce ERC 721s and ERC 20s. So it's kind of
Right.
like a vehicle that's perfect because, like, for that, you're able to kind of have that liquidity shift by owning an 1155 contract. And another thing that people always overlook is that, yeah, whenever you're borrowing a mortgage, buying a house, depending on the contract as well, within a few months, they can sell it right away and already accrue the interest that's over time, or they could just hold on
Exactly.
to it.
Right. Yeah.
For the regular user, like, we don't have this functionality in the real world. So it's a great thing to have in the digital sense because you're able to kind of have I would say not crowd sharing, but basically being able to get multiple loans or having a order fulfilled.
Right. Exactly.
So yeah, I want to dive a little bit deeper into kind of like the 1155s, and also a little bit more about like the process of it as well. So with the shift, I saw that you guys have V1 and V2. That's the
Mhm.
V2 is going to be releasing soon. Can you tell us a little bit more about some of the features that you're upgrading on there?
Sure. Great. Thank you. Great question, Michael. So V1, basically we have just one pool for all the digital asset. Just like Compound and Aave and all these protocol, they just put all the digital asset in one pool. For V2, we will basically break down into many different pools. So we have many different contracts, and each of the pool they have a unique SP and JP token, where those will be non-fungible between different pools. And we make them individual pools because they all have different interest rate, they all have different maturity date, and they all have different underlying asset collateral in different pool. And we make them independent, so if anything blows up, it will not affect different pools. Yeah, so we just make them different products, and we all can. You're all welcome to try it. It's already running on the Binance Smart Chain mainnet. And after that, we'll be doing the marketplace where people can trade all these SP and JP token going forward. Yeah.
Oh, I see a big arb market,
Yeah.
especially with contracts. Yeah, I see a
Yeah.
huge arb market for that. So they're basically gonna arbitrage interest rates or even
Exactly,
durations. Yep.
exactly, exactly. We see there's a huge market for people to come and arbitrage interest rate, just like what they're doing in at Wall Street right now, right, every day. And we see this can be all done in the DeFi world in a much more efficient way. Yeah, so that's what
Yeah.
you guys are
They're
doing.
doing it currently with like a lot of it's gonna be a lot of the volumes in the bond market right now, especially for the treasury
Mhm,
notes. So like a 2 year and a 10 year, and
mhm.
now bringing that structure to the crypto side is gonna be, yeah, it's gonna be a little bit. I'm
Right.
an arb trader, so like I love arbitrage.
Really? Okay. Good. Yeah. So I can see people come in arbitrage interest rate. Yeah. And for the Pledge V2, what we make the product unique is that for Compound, Aave, and all the DeFi protocol out there, the borrower can return the loan early, meaning that they can get out of the loan position. And once borrower get out of the loan position, the lender will not be able to receive interest payment. So Pledge V2, we create a product where borrower cannot return their loans. So they are locked in. Just like in the real estate world, a tenant come in and sign a 1 year fixed term lease. Once the lease is signed, the lender, in our case, the landlord can get a guaranteed interest payment every single month. So we see this product is unique because we talk to a lot of banks, financial institution, high net worth individual, family offices. They just want a fixed and stable interest payment throughout the course of time, right? They want a fixed guaranteed return. And they're not as smart as you, Michael, right? They don't know how to do all these like yield farming. They don't know how to use MetaMask. They don't know how to deploy contract. They don't know how to add token and play with all these wallet. All they want and all they know is they just need a fixed return, right? Like we tell them you get 3% guarantee, 4% guarantee interest payment, they will be all very excited because they cannot get anything from the bank or from the traditional finance world. So we just tell them you get 3% guarantee because the borrower can never return the money, so they will constantly guarantee to pay you 3% interest payment, and they are very excited. So that's what makes Pledge V2 unique.
Yeah, and a lot of users that like use like savings account doesn't know that whenever you use a savings or a checkings account, that liquidity in the back end is then given to loans. So if I go to Chase and I deposit, $1,000,
Mhm.
someone else walks in behind me and says, "Hey, look, I want to borrow $500." They were like, "Yeah, we'll do it for 5% interest rate for you." And what
Exactly.
happens is that that money is literally kind of taken out of my account. It's just deleting it, deleting numbers on a spreadsheet,
Right, right,
but
right,
the end user doesn't get anything. We get
right. Exactly, exactly,
0.02% in a savings
exactly,
account now, 0 in
exactly.
checkings.
Right, 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 right. Yeah, because I see bank is really inefficient because they have to pay a high salary to all these employees. They have to pay rent for all these expensive office space, retail office space. And for Pledge, we don't need to pay any of that. So we just charge a 0.25% of the transaction fee because we just wrote the smart contract and it just automatically runs. So our cost structure is a lot lower. So we can pass all these savings to the borrower and all the lenders. Yeah.
Mhm. And also before we wrap up as well, I kind of wanted to, have the audience understand like where can they find you and kind of like any final thoughts as well.
Yeah, so just look us up at pleasure.finance, or look me up at Tony Y Chan, Tony Chan on Twitter, and we are on Twitter and Telegram. Yeah, but the easiest will be go to the pleasure.finance website.
Well, yeah. Thanks once again, Tony. It's a pleasure to have you on here to provide insights for the community. Like they're always learning, and having this educational content for them to be able to learn more and kind of dive deeper into the crypto rabbit hole.
Yeah, great. Thank you for giving me a chance to speak here. It's my honor to be here. I hope you all can join the Pledge community, and let's build a decentral bank together, and we build the Wall Street together from scratch. Okay? Yeah, will be fun.
All right. Thank you, Tony.
Okay, thank you, Michael. Have a
Mhm.
great day.
Have a good one.